Hey guys, welcome back to High Yield Intraday Trading. I hope every one of you is doing good. So before we start discussing today's topic, let me request you all to subscribe to my YouTube channel by clicking on the subscribe button here. Once you click on it, you will get the confirmation on the left bottom corner. Post you subscribe to my channel, also make sure to press the bell icon and click on all. You will get the confirmation on the left bottom corner so that whenever I upload a video, you get the notification about the same without any misses. Also, I would request you all to subscribe to my Telegram channel with the name HYIT Intraday Calls because I share a lot of things over there and it might be helpful to you in some way or the other. All right, so before we start with today's discussion, please allow me to mention about an offer that will reduce your capital requirements for trading various segments like the NSE futures and the MCX futures. Okay, talking about the NSE futures, you can trade contracts like Nifty, Bank Nifty, SGX Nifty, etc. with just 6,000 rupees for one lot, whereas in MCX you can trade one lot of crude oil, copper, natural gas, etc. for just 4,000 to 6,000 rupees. Okay, for gold and silver, it will cost you around 10,000 rupees per lot. And not only this, you will be happily surprised when you get to know the other features that are being offered. I can't give you all the details here as there are many, but I will surely share all the details post you get in touch with me. In today's scenario, if you want to trade one lot of crude oil, you need to have a minimum of 1.6 lakhs as your capital, that is 1 lakh 60,000. Similarly, for Nifty, for just one lot, you need to have at least 1 lakh as your capital. Now replace 1.6 lakhs with 4,000 to 6,000 rupees and 1 lakh with 6,000 rupees. It does make a lot of difference to a retail trader like you and me, right? So that's the help I want to extend or offer. And if you are interested, then you can get in touch with me on the details that are being shown on the screen and we can take it forward. All right. So if you hear me with all your focus, you must have heard me saying a particular thing time and again. And that thing is whenever you are about to initiate a buy or a sell position, always wait for the pullback to happen. Now, some people call it as pullbacks and some call it as retracements. Now, whatever you call it, it serves the same purpose. But what's important is you should initiate your trade only post the pullback happens if you are a trend following trader. Now, if you are a contrarian trader, it doesn't matter to you whether it's a pullback or whether it's a retracement. Okay, you will be entirely into the contrarian style of trading. But if you are somebody who is following the trend, what I mean to say here is if a stock is going up by making higher highs and higher lows and you are trading it, then you will be called as a trend following trader. Okay, because you want to initiate a buy position because the stock is going up. So if that's the case, if you are a trend following trader, then it is mandatory for you to wait for the pullback to happen. Okay, now when we talk about pullbacks, all the pullbacks are not healthy pullbacks, right? Many a times you will see that, like for example, if a stock is in an uptrend and you see a pullback happening, now if the pullback is not healthy, then it will not go up any further. Rather, the stock price will keep falling and eventually the trend of the stock will get converted into a downtrend. Okay, now it is a completely different scenario wherein you may ask me how to find whether it is a retracement or whether it is a trend change. Now, please note that this particular topic is an absolutely separate topic which cannot be discussed in this particular video because or else what I can do is I can make another video regarding that particular topic, but let's not mince that particular topic with today's video or else things will become confusing. Okay, let's just concentrate on the pullback thing and whether a pullback is a healthy pullback or an unhealthy pullback. Okay, so having that said, in this video, this is the exact thing that we are going to talk about as to how do we know that the pullback is healthy or not. Also, I will show you the various scenarios wherein a healthy pullback is being shown on the charts so that it becomes easy for you to detect a healthy pullback when you see them on the charts. Okay, see, the main thing is you need to train your eyes in such a way that the moment you see the chart, you should be in a position to mark out the various things that would be happening on the charts or the various things that has already happened on the charts. Okay, so it all depends how much time you invest on the charts. But anyways, let's get back to the topic. Okay, so what I was saying was pullbacks are very important. I mean, we all know that none of the stocks can go up or down continuously, right? If a stock is going up, then it has to take a break and come down for a while, and then later it can start the up move again, breach the latest high, and start making new highs. But before it does this, the stock has to give a pullback, or in other words, the stock has to retrace. Okay, so I hope you're clear on this fact as to what exactly is a pullback and why is it important. Now, talking about this further, let me ask you this. What is the main ingredient that we need to take care of when we are handling the pullbacks? I mean, all the pullbacks cannot be legit pullbacks, right? All the pullbacks cannot be valid pullbacks. We need to have something seeing which we can state that, okay, this is a valid pullback and this is the point where I can initiate my buy trade or a sell trade. What is that thing? That thing is the support level and the resistance level. If a stock is going up and then it gives a pullback, it has to have a support in order for it to go up further. If there is no support, then the stock cannot go up again. Similarly, if a stock is coming down and then it gives a pullback, it has to face a resistance in order to go down further. If there is no resistance, then the stock cannot come down again. As simple as that. Okay, so you need to have a strong support for the pullback to work in your favor. Now, this support thing that I'm talking about can be any indicator or any oscillator, any technical to that matter of fact. Okay, which would be the best one to which one would be the best one is something that I will leave for you to decide. Okay, so if so it can be any technical like a pivot maybe, or maybe a channel, or maybe a band, anything to that matter of fact. Okay, but one thing that you need to take care about this is that the technical that you choose has to be vigorously back tested. Okay, it has to religiously be back tested. You need to have a very strong logic as to why you choose that indicator to be used as a support or a resistance level on your charts. Okay, now moving on to the next thing. If you remember, I had told that not all the pullbacks are legit, right? So let's get onto the charts and let me show it to you. Let me show you some scenarios that can be considered as legit pullbacks, or you can term it as healthy pullback, and some which are not so healthy pullbacks, or you can term it as unhealthy pullbacks. Okay, so let's get onto the chart here, and I already have set the drawings here, okay, to save some time. So as you can see here, just a moment. Yeah, so as you can see here, I have four cubes here: cube 1, cube 2, cube 3, and cube 4, and I will take you through all the four cubes one after the other. Okay, so the top left cube, okay, the top left space, you can say, is the 15 minutes time frame for auto farmer. Okay, so what happened on this particular day on 12th of August 2022? The market opened, right? It was a decent green candle. The next one was again with a huge wick on the top side, which might tell you that auto pharma is not in a mood to go up, it might fall. Okay, but if you remember, I had made another video wherein I had mentioned it very clearly that just because you get a long wick on the top of the candle does not mean that the stock will come down. And the same thing happened here. It shooted up, right? So after two candles, it gave a really huge green candle. And after that candle, we had another green candle. And then it was time for the retracement to happen. So from here to here, it was a retracement, a downward retracement. But at this time, okay, at this time, you would be surely be aware that Orofarma is in a bullish mood. So you will be in a mood to initiate a buy trade post the retracement. Okay, now for this example, I have taken the technical to be used as pivot. Okay, these lines that you see here are pivots. So the blue line that you see here is the pivot line, R1, R2, R3, and on the lower side we have S1, S2, S3. Okay, so when the stock retraces or when it gives a pullback, as I said, we need to mandatorily have a support. Only if we have a support, and when we see that the stock price is actually taking a support at that particular support level, which in this case is the pivot, we initiate a buy trade. So it retraced down here. So what was the first support that you see here? The first support is R3, right? R3 is the first support. But what happened when the candlestick was crossing R3? It didn't stop at all. It just gave a huge red candle and it closed below R3. So R3 cannot be considered to be a support level at all. You can't even think of initiating a buy trade anywhere here. So what is the next support level? The next support level is R2. And what happened there? It took a support there. This red candle that you see here, it closed above R2, which tells you that it is a support level. But will you initiate a trade at this red candle? No. You will wait for the next candle. The next candle also was clearly taking a support at R2, and this also closed above R2. So your entry will be after the closure of this green candle anywhere at this price. This will be your entry. And as I always say, when you take an entry, you have to always make sure that you have some sufficient space between your entry point and the next resistance. So where is the next resistance here? R3 is the next resistance, right? This is your next resistance. And what is the price difference? So let's say, for example, you took the entry, this green candle closed at the high of the candle was 586.95. Let's square it up to 587. Let's say you took an entry at 587. Where is the next resistance? Where is R3? It is at 591. So there is a 4 rupees difference between your entry point, okay, and the next resistance. And what kind of a stock are you trading? You are trading a 500 to 600 rupees stock. So for a 500 or a 600 rupees stock, if the movement happens from this point till the next resistance, then you have all the chances to book a profit of maybe 4 rupees or maybe even 5 rupees, which is decent enough because you are catching a movement of around 1% of the scrip price. So it is a decent trade. Okay, so that is how you read the charts. Okay, now moving on to the next one. So this will be called as a healthy pullback. Sorry, I forgot to mention. Okay, so this will be called as a healthy pullback because it retraced down, took a support at a support level, and then it started moving up again. So it was a healthy pullback. Okay, now moving on to the next one. This happened. So what happened? This is a chart, 15 minutes chart for torrent power. Okay, so since the morning, it has been making continuous green candles. Okay, and this is the candle. 10:15 was the candle which gave a retracement. It was a pullback that happened. Now, one more thing that I would like to bring to your notice that when we talk about pullbacks or when we talk about retracements, people normally think that it is mandatory to get 2 to 3 or 4 to 5 or 6 to 7 red candles. That is not correct. You can even get a pullback or a retracement with just one red candle, the way you see it here. What matters is where is the next resistance and where is the support. The only thing that you need to see is where is the support level and where is the resistance level. Depending on that, you can decide whether this red candle is a pullback or not. So in this example, of course it is a pullback candle because it has come very close to the support level. That is the R1 here. Okay, so the red candle gave a pullback, which came very near to R1. But will you take a entry here? No, you will wait for the next candle to be formed. Next green candle again took a support very clearly at R1 itself and closed here. So your entry will be here after this green candle closed. If we talk about the prices, the high of the green candle is 566.70. Let's round it up to 567. And where is the next resistance? The next resistance is here. The next pivot line, that is R2. And where is it sitting? It is sitting at around 569.50. Right? So again, here you have a chance of earning around 3 rupees or 3 rupees 50 paise. And you are trading a 500 rupees script, so a profit of 3 rupees or 3 rupees 50 paise is good enough as an intraday trader. Okay, now please note that I'm just talking about the pullback. Okay, I'm not talking about what happened at this phase. I'm not talking about that. Now it is very evident that this candle breached the next resistance level, that is R2, and closed above it. So it tells us that it has all uh, it is in all the mood to go up further. So whether you stay back in that trade or not is something that you have to decide. But in this video, what I'm trying to make you understand is how the pullbacks has to be handled. I hope that is clear. Okay, now moving on to the next chart. Here, this will be an unhealthy pullback. Why? Because it zoomed up. The first candle of the day itself gave a huge move, around a 12 rupees or 13 rupees move. And here we are trading a 600 rupees script. So it was a 2% move in the first 15 minutes candle itself. Okay. And then it kept retracing. It kept retracing. It kept falling. Okay. And where is the next support level? The support level is here, the pivot line. So what happened when it actually came very close to the pivot line? Here in real time, you will in real time the analysis that you will do is that this green candle, the 1245 candle, is taking a support at the support level. So will you take a buy entry at this point? Obviously no. You have to wait for the next candle. The next candle is also a green candle, and that again is taking a support at the support level, that is here. So these two candles confirm that the script is taking a support. So where should be your entry? You should enter at the high of this candle, right? But did the trade initiate? Was the trade initiated? Of course, the answer is no. So there will be two scenarios here. One trader will initiate the trade at this candle itself. In that case, the stop loss will be hit. The stop loss should be kept below this support line. Okay, so for the first trader, the stop loss will be hit. And for the second trader, the trade itself will not get executed. It will not get initiated. Okay, but whatever may be the scenario, the thing is, this is an unhealthy pullback. Okay, and after some time you clearly see that the support level has been breached and the script moved down further. Clear? Now moving on to the next one. Now this scenario is a healthy pullback scenario wherein again it has been a continuous green trend. It has been moving up continuously. It is a UPL, it is the UPL chart, a 15 minutes UPL chart. Okay, it has been moving continuously with green candles one after the other. And this was the phase where it actually consolidated. Okay, so healthy pullbacks can happen when the uh, the prices come down, takes a support and moves up again. And the second scenario is when the prices come down and consolidate for a while and then again move up. right? So there are two scenarios where we can expect a healthy pullback to be happening. This is the second scenario. Initially, it went up, went in the consolidation phase, right? And then it gave a breakout in the upward direction. Now, where is the support? The support is the pivot line, right here. But when it was consolidating, actually it did not come close to the support line. It came a max till here. So there is a lot of difference between the low of these consolidating candles and the next support level, right? There's a good difference here. So how will you decide that actually this is a support level that has been given to the that has been provided uh, to the stock price, and that it will go up further? How will you decide that? In such scenarios, it is always ideal to make use of another indicator. And this is exactly the point on which I keep emphasizing, that multiple confirmations are very important in intraday trading. And in this case, this orange line that you see here, it is a 20 period exponential moving average. So if you plot both pivot and a 20 EMA, now please note that 20 EMA is just an example. I'm not asking you to use it in the live trading and take trades. It is just for an illustration purpose. That's it. Okay. So multiple confirmations I was talking about, right? So if you use both pivot and the exponential moving average, then it becomes very clear that this area is a support area, right? Because we have the pivot here, and the 20 EMA also is acting as a very strong support, right? So if you see this candle, the 1:45 p.m. candle, it is taking a support exactly at the 20 EMA, and then it is moving up further. So you can initiate your buy position after the closure of this green candle. So your entry will be somewhere here. And if you see the space between your entry and the next resistance level, that is R3, how much is that? The high of this candle is 784.90. Let's square it up to 785. So let's say you took the entry at a buy entry at 785. Your resistance level is sitting at 788.15, right? So it is a 3 to 4 rupees gap that we have, and we are trading a 700 to 800 rupees script, which in turn tells us that we will gain a profit of around zero point 0.4 or 0.5% of the script price. Again, as a day trader, it's not a bad deal, because you cannot help with the resistance levels. If the resistance level is at 3 to 4 rupees gap, you cannot really help it, because pivots are normally calculated that way, right? So since we have a resistance level here, and the difference between your entry and the next resistance level is just 3 to 4 rupees, and you are trading a 800 rupees script, that's not a that's not a bad deal. I mean, 0.5% earning 0.5% is a big deal. Trust me, people don't even are able to do that. Okay, so that is how you take care, or that is how you know whether it is a healthy pullback or whether it is an unhealthy pullback. Okay, see guys, everything, the entire game of market or the stock market is based on support and resistance. As simple as that. Some call it as support and resistance, some call it as supply and demand. Doesn't matter what people call it, but what matters is you need to know how to read that support level, how to read that resistance level. So all these tips and bits that I just explained in these four scenarios are very important. It will it will surely help you in your intraday trading. Okay, so that is what I wanted to discuss with you guys, and I hope that you are clear on how to read a pullback. I'm sure that going forward you will be able to recognize which one is a healthy pullback and which one is an unhealthy pullback, and depending on that, you can initiate your buy or sell trades. Okay, so that's it from my end, guys. And for the guys who have not watched my previous video, I have put in the video card on the top right corner of the video, the eye symbol that you see there. You can click on it and watch my previous video. And as always, we request you all to like and subscribe to my YouTube channel. And also, please do not miss the ending of this video, as you will get some more information about HYIT that will be helpful to you in some way or the other. And please feel free to ask your questions or queries, if any, in the comments section, and I will surely reply back to them. And also, please do not forget to like this video if you liked it. Okay, so that's all from my end, and I will see you all later. Hope you all will stick back. Happy trading and take care of yourselves. Bye bye.